Based on the provided data, the trend for Bitcoin appears to be bearish with a potential for short-term consolidation. The historical price action shows a consistent decline from February 19 to March 4, with significant drops around February 26 and March 1. The forecast data also suggests a continued downward trend throughout the week of March 5 to March 11. Therefore, a short position could be considered. A good entry point would be around $86, $500 on March 5, with a stop-loss order placed at $87, $600 to manage risk. The target price could be set at $85, $300, based on the forecast data and the historical support level around $84, $200. This strategy leverages the bearish trend and potential for price decline, while also incorporating risk management measures. Based on the provided data, Bitcoin Cash appears to be in a volatile sideways trend. The historical price data shows fluctuations within a range, with support around $296 and resistance at $325. The forecast data suggests a slight downward movement in the coming week. Considering this, a conservative strategy could involve entering a short position when the price touches the resistance level of $325. A stop-loss order could be placed at $328 to limit potential losses. The target price could be set at $296, aiming for a potential profit of $29. Alternatively, a strategy utilizing RSI could be employed. Waiting for the RSI to fall below $20, indicating an oversold condition, could signal a potential buying opportunity. An entry price could be set around the $296 support level. A stop-loss order could be placed at $290 to mitigate risk. The target price could be set at $325, aiming for a potential profit of $29. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of 63 cents in the last week. The forecast data also predicts a further decline in the coming week. Considering these factors, a short position is recommended. A suitable entry price for a short position would be around $0.725, the price point at which the downtrend becomes more apparent. The stop-loss order should be placed above the recent resistance level of $0.867 to minimize potential losses. The target price for this trade could be 60 cents, representing a potential profit of 17.5%. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $2,140 on multiple occasions. The forecast data further reinforces this bearish outlook, predicting continued price drops in the coming week. Therefore, a short position is recommended. Enter a short position at $2,190, with a stop-loss order placed at $2,230 to limit potential losses. The target price for this trade is $2,000, based on the forecast data and the historical downtrend. This strategy leverages the downward momentum of the market and aims to capitalize on the expected price decline. Based on the provided data, XRP appears to be in a downtrend. The historical price data shows a consistent decline from February 19 to March 4, with the price falling below the support level of $2.39. The forecast data suggests this downtrend may continue, with prices hovering around the $2.37 to $2.45 range. Given this bearish outlook, a short position could be considered. A suitable entry price for a short position would be around $2.40, with a stop-loss order placed at $2.50 to limit potential losses. The target price could be set at $2.20, aiming to capitalize on the anticipated price decline. RSI suggests the asset is not oversold, and Bollinger Bands show price action staying within the lower band, further supporting a short position. Based on the provided historical and forecast data, the trend for Binance Coin appears to be bearish. The price has been generally declining over the past 2 weeks, and the forecast predicts further downward movement in the coming week. Support at $574 is strong, acting as a floor for the price. Given this bearish outlook, a short position could be considered. A suitable entry price for a short position would be around $590, coinciding with the first forecast price. The stop-loss order should be placed above the immediate resistance level and recent swing high at $611, limiting potential losses. The target price for this trade could be set at $567, aligning with the predicted low point in the forecast. This strategy leverages the anticipated downward trend and the identified support and resistance levels. Based on the provided historical and forecast data, Stellar appears to be in a sideways trend with a slight downward bias. The support and resistance levels indicate a consolidation zone between $0.283 and $0.323. The RSI oscillates around the neutral level, suggesting a lack of strong momentum in either direction. However, the forecast data shows a potential for further decline in the coming week. Therefore, a cautious approach is recommended. A short position could be considered if the price breaks below the support level of $0.283. The entry price would be $0.283, with a stop-loss placed at $0.286 to limit potential losses. The target price could be set at $0.274, based on the forecast data. This strategy utilizes both the support level and the forecast data to identify a potential entry point and profit target. Remember, this is a high-risk strategy and should be implemented with caution and proper risk management. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement in the coming week. The RSI indicator is hovering around oversold levels, suggesting potential for a short-term bounce, but the overall trend remains bearish. Therefore, a short position is recommended. We should enter a short position at the market price on March 5, $2,025, with a stop-loss order placed at $3.10. This stop-loss level is slightly above the recent support price and the forecast low, aiming to limit potential losses. The target price for this trade is $2.75, which aligns with the predicted lows in the forecast data. This target price represents a potential 10% return on investment. The Cardano price has experienced a period of decline, followed by a potential upward trend based on the historical and forecast data. The support price of $0.941 provides a strong foundation for a potential bullish move. A long position could be initiated when the price breaks above the resistance level of $1.11, with an entry price set at $1.115. The stop-loss order should be placed below the recent swing low at $0.647 to limit potential losses. The initial target price could be set at $1.20, representing a 8.6% gain. The RSI indicator suggests that Cardano is currently not overbought or oversold, indicating a potential for further price movement. The Bollinger Bands show that the price is consolidating within the bands, suggesting a period of sideways movement or a potential breakout. A breakout above the upper Bollinger Band could signal a strong bullish trend, further supporting the long position strategy. Based on the provided data, Litecoin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices project further downward movement. The support price at $101 suggests a potential floor for the price, while the resistance at $127 acts as a ceiling. Given this trend, a short position strategy is recommended. We can enter a short position at $114, the closing price on February 27. The stop-loss order should be placed at $118, slightly above the recent resistance level and the upper Bollinger Band. The target price for this trade is $98, aligning with the projected forecast price and the lower Bollinger Band. This strategy aims to capitalize on the anticipated downtrend while managing risk with a defined stop-loss. Based on the provided data, a potential investment strategy for Swaycoin is as follows. The historical data and forecasts suggest a downward trend for Swaycoin in the coming week. The RSI, hovering around $38, indicates the asset is neither overbought nor oversold. However, the Bollinger Bands show price action converging towards the lower band, suggesting a potential for further price decline. Therefore, a short position could be considered. A suitable entry price would be around $2.82, the closing price on March 4th. The stop loss could be set at $2.95, the high of the previous day, to limit potential losses. The target price could be set at $2.47, based on the forecast for March 5th, aiming for a potential profit of approximately $12%. This strategy utilizes both the trend analysis and the Bollinger Bands indicator to identify a potential shorting opportunity. Based on the historical data and forecast, Aptos appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast projecting further downward movement in the coming week. The support level at $5.33 might act as a temporary floor, but the overall trend suggests a bearish outlook. Therefore, a bearish strategy is recommended. A short position can be entered at the market price around $5.71, with a stop-loss order placed at $5.87, the resistance level. The target price could be set at $5.03, the lowest forecast price for the coming week. This strategy leverages the anticipated downtrend and aims to capitalize on the potential price decline. Remember that trading involves risk, and this strategy is not a guarantee of profits. Based on the provided data, SE appears to be in a sideways trend with potential for slight downward movement in the coming week. The historical data shows price fluctuations within a range, with the support price consistently around $0.142 and the resistance price hovering at $0.233. The forecast data suggests a potential dip below the current support level, indicating a possible bearish trend. Therefore, a cautious strategy would be to wait for a confirmed break below the support level of $0.142. Entry price could be set at $0.141, with a stop-loss order placed at $0.140 to minimize potential losses. The target price could be set at $0.215, which is the lowest forecast price for the week. This strategy utilizes the support and forecast data to identify a potential entry point and sets clear risk management parameters. Based on the provided data, Ethereum Classic appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, and the forecast data suggests this trend will continue. The support and resistance levels further reinforce this downtrend, with the price consistently finding resistance at around $20.20 and support at $18.60. Considering this downtrend, a bearish strategy is recommended. We will enter a short position at $19.10, the predicted price on March 05, 2025. The stop loss will be placed at $19.60, slightly above the recent resistance level, to limit potential losses. The target price is set at $17.30, the predicted price on March 07, 2025, representing a potential profit of $10%. This strategy leverages the downtrend and uses technical indicators to define entry, stop loss, and target prices. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with a notable drop in the last few days. The forecast data further supports this bearish outlook, predicting continued price decline over the next week. Considering these trends, a short position could be considered. A suitable entry price would be around $0.275, a level near the recent lows. The stop-loss order should be placed above the recent swing high at $0.285 to limit potential losses. The target price could be set at $0.240, a level based on the forecast data and the broader downtrend. This strategy leverages the perceived weakness in the market and aims to capitalize on the potential for further price decline. It's important to note that this is just one possible strategy and should be carefully evaluated before implementation. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data projects further downward movement. The RSI indicates oversold conditions in several periods, suggesting potential for a temporary rebound. However, the overall trend and the forecast suggest a continued downward movement. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of 13 cents. Set a stop-loss order at 14 cents to limit potential losses. The target price for this trade is 10 cents, based on the forecast data and the downward trend. This strategy combines the bearish trend, oversold RSI signals, and the forecast price movement to maximize potential profits while minimizing risk. Based on the provided historical and forecast data for optimism, a potential investment strategy can be implemented. The trend analysis suggests a downward movement in the price of optimism. Considering the forecast prices and the support and resistance levels, a potential entry point could be around $0.979, which is a key support level and a point where the price is likely to bounce back. A stop-loss order should be placed at 94 cents, below the recent lows, to limit potential losses. The target price could be set at $1.08, which is a previous resistance level and a potential upside target. Furthermore, incorporating RSI and Bollinger Bands into the strategy can enhance its effectiveness. The RSI indicator suggests that the asset is oversold, presenting a potential buying opportunity. Additionally, the price is currently trading below the middle Bollinger Band, indicating a potential for further downward movement. However, a potential bounce back can be expected as the price approaches the lower Bollinger Band. This confluence of signals from RSI and Bollinger Band strengthens the rationale for the entry point and target price mentioned above. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data predicting further downward movement. The RSI indicator is also below $50, suggesting bearish sentiment. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price touches the resistance level of $0.229. Set a stop-loss order at $0.235 to limit potential losses. The target price is $0.161, based on the predicted low point in the forecast data. This strategy leverages the potential for continued downward price movement in STRK. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price breaking below key support levels. The forecast data also suggests further downward movement in the coming week. Considering the RSI, which is currently hovering around $40, indicates that the asset is not oversold and there is potential for further downside. The Bollinger Bands show that the price is trading near the lower band, suggesting a potential for further downward movement. Therefore, a bearish strategy is recommended. Enter a short position at the market price around $141. Set a stop-loss order at $147 to limit potential losses. The target price is $125, based on the forecast data and the potential for the price to reach the lower Bollinger Band. This strategy aims to capitalize on the downtrend and potential for further price decline. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further price drops. The RSI indicator is currently hovering around $39, suggesting that the asset is not oversold. However, the Bollinger Bands indicate a potential for further price decline as the price is trading below the middle band and approaching the lower band. Therefore, a conservative strategy would be to wait for a potential bounce off the support level of $0.504. Once the price rebounds above $0.600, a long position could be entered with a stop-loss order placed below the recent swing low at $0.580. The target price could be set at $0.800, aiming for a potential upside of 33%. This strategy combines the support level with the RSI and Bollinger Bands to identify a potential entry point and manage risk. Based on the provided data, render appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI is hovering around the neutral level, suggesting a potential for further downward momentum. The Bollinger Bands are contracting, indicating a period of consolidation before a potential breakout. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $3.50. Set a stop-loss order at $3.60 to limit potential losses. The initial target price is $3.30, with a potential for further downward movement to $3.10 if the downtrend continues. This strategy leverages the perceived downtrend, RSI levels, and Bollinger Band contraction to potentially profit from a further decline in render. Based on the provided data, Solana name service appears to be in a downtrend. The historical price action shows a consistent decline, with the price falling below the support level of $0.116 several times. The forecast data also suggests a continuation of this downtrend. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around $0.116, close to the current support level. The stop-loss order should be placed above the recent high of $0.139, providing a buffer against unexpected price surges. The target price for this trade could be set at $0.105, based on the forecast data and the overall downtrend. This strategy leverages the potential for further price decline in Solana name service. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices further suggest a continuation of this downward movement. The RSI indicator also supports this bearish outlook, with values remaining below $50 for most of the period and dipping into oversold territory on several occasions. Therefore, a short position strategy is recommended. Enter a short position at the market price around $0.207 USD. Set a stop-loss order at $0.237 USD, the recent resistance level, to limit potential losses. The initial target price is $0.179 USD, based on the forecast price for March 7. Monitor the RSI and Bollinger Bands closely. If the RSI falls below $20 or the price breaks below the lower Bollinger Band, consider adjusting the stop-loss price lower to secure profits. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI, while fluctuating, remains below $50, indicating bearish momentum. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction, but the overall trend favors a downward movement. Therefore, a short position is recommended. Enter a short position at the market price when the price approaches the resistance level of $0.000000750. Set a stop-loss order at $0.000000780 to limit potential losses. The target price is set at $0.000000610, based on the forecast data and the support level of $0.000000670. This strategy aims to capitalize on the anticipated downtrend while managing risk effectively. Based on the provided data, Shiba Inu appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data predicting further downward movement. The RSI, hovering around $35 to $45, suggests the asset is neither overbought nor oversold, but the downward trend might indicate a weakening momentum. The Bollinger Bands, with the price consistently trading below the middle band, further support the bearish outlook. A potential strategy could involve entering a short position when the price touches the resistance level of $0.0000137. The stop loss should be placed at $0.0000140, allowing for a small margin of error. The target price could be set at $0.0000129, the identified support level. This strategy combines the bearish trend analysis with the price action at key support and resistance levels. It's important to note that this is a single strategy based on limited data and should be further analyzed and backtested before implementation. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further downward movement. The RSI indicator is currently below $30, indicating oversold conditions, suggesting a potential for a short-term bounce. However, the overall trend remains bearish. Therefore, a short position could be considered. An optimal entry price for a short position would be around $0.629, the recent high. The stop-loss order should be placed above the recent swing high, around $0.641, to limit potential losses. The target price could be set at $0.513, a significant support level identified in the forecast data. This strategy aims to capitalize on the prevailing downtrend while mitigating risk through a well-defined stop-loss order. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data suggesting a continuation of this trend. The support level at $0.00265 appears to be holding, but the resistance level at $0.00317 is proving difficult to break. Therefore, a bearish strategy is recommended. Enter a short position at the market price when Doge-Coin breaks below the support level of $0.00265. Set a stop-loss order at $0.00278 to limit potential losses. The initial target price is $0.00259, the first forecast price. If the price continues to decline, adjust the stop-loss to the entry price and set a new target price at $0.00239, the lowest forecast price. Remember to manage your risk and consider the overall market conditions before executing any trades. Based on the historical and forecast data, Near Protocol appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week indicates further downward movement. The support level at $2.74 is crucial to watch, as a break below this level could accelerate the decline. Considering these factors, a short position could be considered. An entry price around $3 could be appropriate, with a stop-loss order placed at $3.10 to limit potential losses. The target price could be set at $2.74, which represents the immediate support level. This strategy leverages the downtrend and aims to profit from the potential price decline. Based on the provided data, Internet Computer appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The support and resistance levels also indicate a bearish sentiment, with the resistance level at $6.96 being consistently breached. Therefore, a short position strategy is recommended. Enter a short position at the current market price around $6.14. Set a stop-loss order at $6.96 to limit potential losses. The target price should be set at $5.50, based on the forecast data and the potential for further price decline. This strategy capitalizes on the downtrend and aims to profit from the expected price drop. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further price drops. The RSI indicates that the asset is oversold, suggesting a potential for a short-term rebound. However, the overall trend and the Bollinger Bands, which show price consistently trading below the middle band, suggest a continuation of the downtrend. Therefore, a bearish strategy is recommended. Enter a short position at the market price of $11.90, with a stop-loss order placed at $12.70 to limit potential losses. The target price should be set at $9.36, which aligns with the forecast low for the week. This strategy leverages the downtrend and the oversold RSI, while managing risk with a defined stop-loss. Remember, trading involves risk, and past performance is not indicative of future results. BTC has shown a clear downward trend over the past 2 weeks, with the price consistently falling and testing the support level of $287. The forecast for the next week suggests this downtrend will continue, with prices projected to fall below the current support level. Based on this analysis, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $295 to limit potential losses. The target price for this trade is set at $275, aiming to capitalize on the expected continued decline. The RSI indicator currently sits at $35.10, indicating oversold conditions. This suggests that the price may be nearing a bottom and a potential reversal could occur. However, the continued downward trend and the forecast data point towards further decline. Therefore, the short position strategy is prioritized, with a stop-loss order in place to manage risk. The Bollinger Bands show the price consistently trading below the middle band, further reinforcing the bearish sentiment. This strategy aims to capitalize on the prevailing downtrend while managing risk with a well-defined stop-loss order. Based on the provided data, THETA network appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator also supports this view, as it remains below $50, indicating bearish sentiment. The support level at $0.947 provides a potential buying opportunity, but it's crucial to manage risk. Therefore, a potential strategy could involve entering a long position when the price bounces off the support level at $0.947. A stop-loss order should be placed below the support level at 90 cents to limit potential losses. The target price could be set at $1.20, based on the resistance level and the anticipated upward momentum. This strategy combines the support level with the potential for a price rebound, aiming to capitalize on a potential short-term bullish move. Based on the provided historical data and forecasts, WorldCoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. Considering this trend, a short position could be taken. A suitable entry price would be around $1.06, with a stop-loss set at $1.11 to limit potential losses. The target price could be set at $0.847, based on the lowest forecast price for the week. The RSI indicator also supports a short position. The RSI has been hovering below $50, indicating bearish sentiment. Additionally, the RSI is currently at $33.60, which is close to the oversold level of $20. This suggests that the price may have further downside potential. The Bollinger Bands also reinforce this bearish outlook. The price is currently trading below the middle band and is approaching the lower band, indicating a potential for further downward movement. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further decreases in the coming week. The RSI indicator is currently hovering around $38.90, suggesting that the asset is not oversold. However, the price is approaching the lower Bollinger Band, indicating potential for further downside movement. A conservative strategy could involve entering a short position at the current market price of $0.172, with a stop-loss order placed at $0.175 to limit potential losses. The target price could be set at $0.154, based on the forecast data. This strategy leverages the downtrend and the potential for price to break further downwards. Remember that this is just a suggestion, and you should always conduct your own thorough research and risk assessment before making any investment decisions. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI, hovering around $30, indicates oversold conditions, suggesting a potential for a short-term bounce. However, the price is consistently trading below the $20 day moving average, reinforcing the bearish outlook. A short position could be considered with an entry price at $0.588, the first forecast price. The stop loss should be placed above the recent high at $0.628, providing a cushion against an unexpected upward move. The target price could be set at $0.526, the lowest forecast price, aiming to capture a significant portion of the anticipated decline. This strategy combines the bearish trend with oversold conditions and the forecast data to maximize potential returns. Based on the provided data, Polkadot appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $3.86 in several instances. The forecast data also indicates a continued downward trend. The RSI, while fluctuating, remains below $50, suggesting bearish sentiment. Considering these factors, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $4.77, the resistance level, and a target price of $4.06, the lowest forecast price. This strategy leverages the perceived downtrend and aims to profit from a further decline in the price of Polkadot. Based on the provided data, Filecoin appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations within a range, with the recent forecast indicating a potential further decline. Considering this trend, a short position could be initiated at the entry price of $3.07, the current resistance level. The stop-loss order should be placed at $3.15, slightly above the recent high and the upper Bollinger Band, to limit potential losses. The target price for this short position is set at $2.93, the identified support level, aiming to capture the potential downward movement. The RSI indicator currently stands at $38.60, suggesting that the asset is not oversold. However, a short position based on the trend and price action could be further supported by a potential RSI dip below $40, indicating a weakening bullish momentum. Bollinger Bands show price fluctuations within the bands, with the price currently hovering near the upper band. A break below the lower Bollinger Band could signal a stronger downward movement and potentially confirm the short position. The combination of trend analysis, RSI momentum, and Bollinger Band support provides a solid basis for this short strategy. Based on the provided data, Conflux appears to be in a sideways trend with a slight downward bias. The historical price data shows a range between $0.0938 and $0.145, with recent price action consolidating around the 11 cents level. The forecast data suggests a continued downward trend, with prices potentially dipping below the 10 cents level. Considering this, a short position could be considered. A suitable entry price for a short position would be around $0.112, the recent resistance level and the price point where the forecast data indicates a potential reversal. A stop-loss order should be placed at $0.116, slightly above the recent high and the upper Bollinger Band. This would limit potential losses. The target price for this trade could be around $0.098, based on the forecast data and the lower Bollinger Band. This strategy combines the downward trend, RSI signals, and Bollinger Band predictions to create a potentially profitable short position. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The RSI consistently hovers below $50, indicating bearish sentiment. Support at $20.20 suggests a potential bounce, but the overall trend remains bearish. A suitable strategy would be to enter a short position when the price touches the resistance level of $25.10. The stop-loss order should be placed at $25.50 to limit potential losses. The target price could be set at $18.90, aligning with the forecast data and the downtrend. This strategy utilizes both the trend and the RSI indicator to identify potential entry and exit points. Based on the provided historical and forecast data, Avalanche appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $16.10 is crucial to watch. A potential entry point could be around $20, with a stop-loss order placed below the recent support level at $16.10. The target price could be set at $17.60, which aligns with the forecast low and represents a potential $12% return. Using the RSI indicator, an oversold condition is indicated when the RSI drops below $20. Currently, the RSI is above this level, suggesting that the asset is not yet oversold. However, if the price continues to decline and the RSI falls below $20, it could signal a potential buying opportunity. The Bollinger Bands indicate that the price is trading near the lower band, suggesting a potential for a bounce. However, the overall downtrend suggests caution and a focus on downside risk. Combining these strategies, the most efficient approach appears to be a short position entry around $20 with a stop-loss at $16.10 and a target price of $17.60. Based on the provided historical and forecast data for Bitcoin, a potential investment strategy could be implemented. The trend analysis suggests a downward movement in price, supported by the forecast data showing a decline over the next week. Considering the support price of $0.0268, a long position could be initiated when the price rebounds from this level. A stop-loss order should be placed below the support price at $0.0265 to limit potential losses. The target price could be set at $0.0295, aiming to capture a potential upward movement within the established trend. Additionally, the RSI indicator can be used to identify potential entry and exit points. A buy signal could be generated when the RSI crosses above $30, indicating a potential oversold condition. Conversely, a sell signal could be triggered when the RSI moves above $70, suggesting an overbought scenario. The Bollinger Bands can also provide insights into price volatility and potential reversals. A breakout above the upper band could signal a strong bullish trend, while a breakdown below the lower band might indicate a bearish reversal. Combining these technical indicators with the trend analysis and support/resistance levels can help refine the investment strategy and optimize potential returns. Based on the provided historical and forecast data, PENDLE appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support price of $2.45 provides a potential buying opportunity. A suitable strategy could involve entering a long position at the support level of $2.45. A stop-loss order should be placed at $2.40 to limit potential losses. The target price could be set at $2.85, which represents a potential upside of $16%. This strategy leverages the oversold condition indicated by the RSI, which is below $30. Additionally, the price is approaching the lower band of the Bollinger Bands, suggesting a potential bounce. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicates oversold conditions, but the price has been unable to rebound strongly, suggesting weak buying pressure. The Bollinger Bands are narrowing, which could signal a potential breakout in either direction, but the overall trend remains bearish. Therefore, a bearish strategy is recommended. Enter a short position at $0.318, the current price. Set a stop-loss order at $0.330, above the recent high and the upper Bollinger Band. Target a profit at $0.280, a level supported by the forecast price and the lower Bollinger Band. This strategy aims to capitalize on the prevailing downtrend while managing risk effectively. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data predicting further price drops. The RSI indicator, hovering around $35, suggests the asset is not oversold, while the Bollinger Bands show price action consistently below the moving average, indicating a bearish trend. Therefore, a suitable strategy would be to initiate a short position when the price reaches $0.295, the recent high within the downtrend. The stop loss should be placed at $0.308, just above the recent resistance level, to limit potential losses. The target price would be $0.257, based on the forecast data and the downward trend. This strategy capitalizes on the bearish momentum while managing risk effectively. Based on the provided data, ENG coin appears to be in a downtrend. The historical price data shows a general decline, and the forecast data predicts further decreases. The RSI indicator is also below $50, suggesting bearish momentum. Therefore, a short position strategy is recommended. A bid entry point would be around $0.106, as this price level aligns with recent support and the predicted low point in the forecast. The stop loss should be set at $0.112 to limit potential losses. The target price could be $0.0962, which is the predicted low point for the week. Combining this trend-based strategy with the RSI indicator, we can refine our entry and exit points. A short position should be entered when the RSI dips below $30, indicating oversold conditions. Conversely, a stop loss could be set at the RSI reaching $50, signaling a potential reversal. The target price remains $0.0962. While the Bollinger Bands don't provide a clear signal in this case, it's important to note that price movements below the lower band could further confirm the downtrend. Based on the provided historical and forecast data, Uniswap appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $6.90 suggests a potential bounce, but the overall trend suggests selling pressure. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $6.90. Set a stop-loss order at $7.10 to limit potential losses. Aim for a target price of $6.26, which aligns with the forecast low for the upcoming week. This strategy utilizes the downtrend and the forecast data to capitalize on potential price declines. Analyzing the provided data, Chainlink appears to be in a downtrend. The historical price action shows a consistent decline, supported by the forecast data indicating further price drops. The RSI, consistently below $50, reinforces this bearish sentiment. The Bollinger Bands also suggest a downtrend, with the price hovering near the lower band. Based on this analysis, a short position strategy is recommended. Enter a short position at the market price around $14.80. Set a stop-loss order at $15.40 to limit potential losses. The target price is set at $13.40, based on the forecast data and the potential for further downside movement. This strategy aims to capitalize on the prevailing downtrend while managing risk through a well-defined stop-loss. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below key support levels. The forecast data also suggests continued downward pressure. A position strategy based on this trend would involve entering a short position when the price reaches the resistance level of $221. The stop-loss order should be placed above the recent high of $221, while the target price should be set at the support level of $202. This strategy aims to capitalize on the ongoing downtrend and limit potential losses. To further enhance this strategy, we can incorporate the RSI indicator. When the RSI falls below $20, it signals an oversold condition, potentially indicating a short-term reversal. However, given the prevailing downtrend, we should prioritize the trend-based strategy and only consider entering a short position when the price reaches the resistance level. The Bollinger Bands can also be used to identify potential entry and exit points. A break below the lower Bollinger Band could confirm the downtrend and provide a further signal to enter a short position. Based on the provided historical and forecast data, EOS appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with a forecast predicting further downward movement in the coming week. The support price of $0.424 provides a potential floor, while the resistance price of $0.578 acts as a significant hurdle. Given this trend, a short position could be considered. A potential entry price for a short position would be around 56 cents, near the current price. A stop-loss order could be placed at $0.578 above the resistance level, to limit potential losses. The target price could be set at $0.424, the support level, aiming for a potential profit of $25%. Based on the provided historical and forecast data, Tron appears to be in a short-term downtrend. The price has been consistently falling over the past 2 weeks, and the forecast suggests this trend may continue. The support level at $0.222 provides a potential floor for the price, while the resistance level at $0.246 presents a hurdle for any upward movement. Given this context, a short position could be considered. A suitable entry price for a short position would be around $0.238, near the current market price. A stop-loss order could be placed at $0.222, the identified support level, to limit potential losses. The target price could be set at 22 cents, aiming for a profit of approximately 8%. This strategy is based on the expectation that the downtrend will continue and the price will fall towards the support level. Based on the provided historical and forecast data, Suncoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further declines in the coming week. Support is located at $0.0168 and resistance at $0.019. Considering this trend and the RSI, which is currently below $50, a bearish strategy could be implemented. A potential entry point would be at the $0.0174 level, with a stop-loss order placed at $0.0168 to limit potential losses. The target price could be set at $0.0165, based on the forecast data and the current downtrend. While the Bollinger Bands are relatively tight, indicating a potential for increased volatility, the overall trend remains bearish. This strategy focuses on capitalizing on the existing downtrend and mitigating risk with a defined stop-loss.